The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time, and we got markets picking up where we left off since basically the lows of Friday. How's 250 S&P points from Friday? And yeah, I keep going back to the low, but man, we got quite a resurgence to higher price, and today we're up by another 21 points or 0.3% in the S&Ps, right near that 6,900 price point. NASDAQ 100, we're higher by more than 0.5%. How about the NASDAQ 100? Almost 1,100 points from Friday's low. And we are just above the highs in terms of where you were Friday. Yesterday, just backing off a bit. Today, we're up by 141 points, or 0.6%. The Dow up by 106 points right now, 0.2% in the green. And you have the Russell up by 0.2 as well, 2472. Bitcoin, a little bit of a resurgence to higher price in the overnight market, up by $2,100 at 105,000. Bitcoin's up 2%. Ethereum up by almost 4%, 3573. How about crude? 61.28 yesterday. We're trading at 59.74 right now for light sweet crude. Yeah, as it continues to drop. You jump over to golds. We hit a high Monday night, 41.55. You came up to there last night as well, just above 41.50. And today we're up by $24 on the session right now on gold, up by 0.6%. 41.40. How's that for a price tag? 41.40. Jump over to silver. Up by 2%, 51.75. We're checking on yields this morning. The 10-year, some higher price and lower yield yesterday. And right now we're talking about a yield of 4.07. Okay, 4.07 on the 10-year. A little bit of lower yield. The dollar dropped off on that lower yield yesterday to 99.28. We're back where we were prior to the open yesterday. We're up by 212 ticks, 99.65 on the dollar. You jump over the VIX. Very little volatility premium in this market right now at 17.19, especially compared to where we've been just recently. Okay, we talk about the shutdown, and yeah, all indications are they're marching forward. It'll get back open. House poised to end the historic shutdown over the Democrats' objections, as Bloomberg puts it. But yeah, House lawmakers are going to vote to end that shutdown. And that would reopen that government, excludes an extension on those premium, the Obamacare healthcare tax credits. And yeah, we're at 43 days. But lawmakers are going to return on Wednesday for a vote, which has stalled air travel. Now, you jump from there to air travel. Okay, air travel? Yeah, it seems like that's all, that's what we all like, right? A little bit of certainty. If you know that that money's coming in and you know that there's a deadline, that's one thing. For these TSA agents, air traffic controllers that are just out of work, owed 200 hours. 200 hours. A lot of these employees are now, they missed 2 full paychecks. A full paycheck is 80 hours. 2 full paychecks is 160 hours. They had a partial missed paycheck before. You're talking about 43 days. Right? You're talking about 6 weeks, 200 plus hours. So yeah, not surprising that some people were calling out using sick days. But guess what? We're back on track. Flights on track for the fewest cancellations since those cuts were ordered. So yeah, you hear about a $10,000 bonus. You hear about getting docked pay, whatever it was in the president, and they're back. As of 4 a.m. New York time, 878 U.S. domestic and international flights are indicated as canceled. And that number may rise. But fewer scheduled flights. 23,000 slated, 2,500 flights, 2,500 airplanes, less than average. Tuesday and Wednesdays tend to be slower travel days in general. Now, I'm not going to be here tomorrow morning, all right? May have a guest host in here. But I'm going to be flying myself tomorrow morning. I got a flight out of Tampa to beautiful Boston to experience a beautiful weekend up in Boston, Massachusetts. And so keep me in your thoughts tomorrow on those airlines. No. Thankfully, a little bit of a light at the end of the tunnel. But yeah, nonetheless, things easing a bit. You look at the cancellations, the worst of it, Sunday, the 9th. Monday, cancellation rate 8.1%. Yesterday, 5%. And it looks like today, so far, we're at a cancellation rate of 3%. So a good thing that the skies seem to be opening back up and things calming down a bit. All right, we check in on some equities. Amazon shares. This thing's been on a rocket ship, man. 252 was what we just hit in the pre-market. You got highs out there at 258 recently. That spike high that we got October 31st. You jump over to Meta shares. Meta's going to be up by about $3 in the pre-market right now. And let me see if I can find it. So Meta loses their chief AI scientist, right? And this guy's... Do I have it? Yes, I do. Okay. So check this one out. This one's an opinion piece. So this is the gentleman, okay? Jan LeCun, probably going to botch that name, okay? One of the leading scientists, known as one of the godfathers of AI. He's leaving Meta after 12 years to start his own company. He's argued, and this is awesome. Look up some videos on this guy. I got one video in particular. Let me see if I can find it. No, it's a different one. But this gentleman, okay? So his case here, right, is that he thinks the drive to just large language models is not the best way to have breakthrough, right? Breakthrough generative intelligence. He basically argues, as they put it here, okay, that the focus on large language models is an unhealthy obsession, and that world models trained on spatial data are needed to create software that's smarter than humans. And what he basically makes the case of, and I'm going to summarize in a way of somebody who is probably not qualified to summarize the fundamentals of this breakthrough in AI. But basically what he argues is that, and this is the video, and I'll post this one in the Tiger's Den. All right, and this is what the gentleman says. Let me see if I can do it. You have... So you get 20 trillion tokens on a regular model, okay? And what he says is 20 billion tokens, excuse me. And a token's like a word. A token's 3 bytes. One with 14 zeros. So if you have all the text in the world, that's 1 with 14 zeros in it, okay? That sounds like a lot. That sounds like more text than any of us could ever read in 100,000 lifetimes, right? 100,000 years, several 100,000 to read through that material. But guess what? You compare that to the amount of information that gets to your brains, okay? Through the visual system, our eyes, just by the time you're 4 years old, you've already amassed that much information for 16,000 hours getting to the brain through your optical nerves, okay? The amount of data we as humans are able to process, amazing. So he's thinking bigger, but guess what? Zuckerberg, he's thinking dollars probably. Nonetheless, meta positive. We got a lot to talk about. We'll come right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We have Meta right now, up by $3. So just continuing that conversation, right? This gentleman, I've heard him talk before, okay? And just some of the stuff that he says, obviously a brilliant guy. He's been at Meta for 12 or 13 years, I think. Yeah, 12 years. He's going to start his own company. And it's just amazing when you look at it. And that's the one that always caught my eye when he, and I've seen these reels online, he makes the comparison to say, basically, listen, all these large language models, okay, they are all the rage right now. Rightfully so, because they're being trained off of everything we currently know, okay? We're feeding it all the text of the world, right? Whether it's Reddit, whether it's the internet, whatever it is, okay? We're feeding it all this text, and it's going to take those large language models, and it's going to be able to completely have 100% supreme knowledge of everything contained within that text, right? That's not good enough. That data is only as much data as a 4-year-old contains from everything they see. And boy, you think about, just even looking around the room myself right now, the number of data points that you are absorbing through your spatial recognition, your eyes, it's an absurd level of data. And he makes the case that it's more than just interpreting the data. Now, some of the other, because I was watching even some last night, I went down a little rabbit hole on YouTube, just checking out even more of what this guy said, right? And the main point here is, if you want AI to solve problems that we don't have solved right now, then you need the next level. Okay, you need to be able to ask the questions, right? You need it to be able to solve things that it is not trained on. That is the next leap. That's stuff that we can do as humans. We can take something that we're not trained on, right? And we can use our knowledge base to overcome the unknowns and solve problems. That level of transition, as opposed to just having a supreme knowledge of all the data already available, is the next leap. And it seems like that's the leap he wants to make. And Zuckerberg has pivoted away. Now, this is an opinion piece, okay? But hard to argue against it when you have a gentleman like this that argues against large language models, okay? And one of the interviews that I was watching last night, they were talking about ChatGPT has 600 million users, or whatever the number is. Facebook AI has this number of users, etc. He even said, though, ChatGPT, their users are much more involved and active. And so it's a different comparison. And even hearing that, I said, oh, Zuckerberg, can you imagine anybody else from Facebook saying, oh, yeah, but ChatGPT users, they're way more into the product than we are, so they have a lot more data, even though they have less users. I was like, oh, he is not towing the line, man. He is out there to solve big problems and solve AI. Contrarian thinker on AI, arguing OpenAI's sparking of the generative AI boom, unhealthy obsession with large language models. Okay? Chatbots are alluring, but they are not the path to the smarter than humans. And that's, I think, what we all hold out there, right? It's one thing that we have the knowledge of what we already know, but when you talk about whether it's healthcare, biotech, anything you're talking about, okay? The next frontier is spatial intelligence. LLMs are wordsmiths in dark, eloquent but inexperienced. And folks, if you play with a chatbot enough, I think you kind of know what he's talking about, right? You ever see the memes out there where you ask it to do one thing, it says, yes, that's great. You actually tell it you went and did the thing, and they weren't right, and it just immediately confirms, you're right, I wasn't correct at all, right? It's kind of the way I think about it in my head is it's almost, it's a series of if-then statements, basically, right? To probably the umpteenth degree. As in, it's just solved what letters to put in front of what letters through learning of other letters. That can go awry, as we see. Yeah, bigger shift is happening at Meta, okay? Away from the fundamental research and towards products. They laid off researchers from his unit while several other high-profile researchers left. So they are now fine-tuning it to products, and he's not thinking about products, this guy. He is big picture, man. So he's gone. But yeah, 2013, he got approached with a blank check to build the world's best AI research lab, Facebook Artificial Intelligence Research, or FAIR. So he was an AI legend, convolutional neural networks at AT&T Bell Laboratories. Taught computers to recognize images, powering everything from facial recognition to self-driving cars. And Zuckerberg showed up in person to recruit him. 12 years later, he's been sidelined, with LLMs being the obsession. So we're going to hear more about that. Because you talk about a shift. And I think the problem for Zuckerberg probably is what can happen when you're spending too much money without taking any in, and the drive for revenue is real. You're going to need revenue to grow out what they need to grow right now, okay? It's all memes everywhere in terms of OpenAI, in terms of $13 billion in revenue, $1.4 trillion in spending obligations. Revenue is going to have to come from somewhere, and I think Zuckerberg realizes that, and he's going to probably try and do both, but right now it's at the sacrifice of larger AI research. And guess what? Maybe this guy's going to fill the void, right? What company is he going to get into? And imagine this guy going and raising money. I mean, gosh, all that guy has to do is go put his name on a company, probably say he's going to solve the AI world and raise money, and they bring it to market, and he'll be given some wide latitude, I imagine. All right. Let's talk about the Fed. December 10th, less than a month away. The Fed. Yeah, they are increasingly torn. And guess what? the market's increasingly torn as well. Right now, it just keeps dropping. We're at a 65.35 for a cut in December, folks. 65.35. You back it up a month ago, it was 92.8. 92.8. Yeah, and it was even higher than that. You go back a little bit further than that. But yeah, only about a 2-to-1, 35% chance that they stay right where they are right now. 375-4. Now, we go out to the January meeting. 20% chance no cuts by then. By January, about a 50% chance. It almost doesn't make sense to go out any further than that, folks, because if we can't even figure out what's happening December 10th, those odds jumping around dramatically. But yeah. You're hearing the wording out there, okay? Some of the Fed governors talking about that they expect a resurgence next year. Okay, this economy, they expect it. Officials are fractured over which possesses the greater threat. Price stability or full employment. And we don't have the data as well, and that's what makes it more difficult. And yeah, if they do cut, is this going to be an issue where they cut and they say, hey, we're done for a little while. We got to let it play out. We'll find out. Markets in positive territory. We're coming back for the opening bell, folks. Folks, stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps right now up by 17. NASDAQ 100 up by 0.4%. We jump around and kick things off. You got Amazon shares up by about 80 pennies. Give it back slightly. You jump over to the big dog, NVIDIA, up by 1%. So SoftBank selling their NVIDIA shares. And, you know, Masayoshi-san, he would do everything to make sure that the last thing he would ever do is sell NVIDIA before an acceleration again, right? My guess is that he saw NVIDIA ring the $5 trillion mark when he said, man, you know, what's the risk reward in this scenario? It doesn't mean you get a tank from here, but the odds that you get some rapid acceleration from a $5 trillion valuation price point right now when you just went from $10 up to 194, that's a far cry, and they have to really deliver on the valuation of $5 trillion. And you talk about one step further, when you go to NVIDIA, all right, October 29th at 212, down to, realistically, you could go from where you were November 3rd as high as, what's the high there? 211.34. You drive down $34 almost in a 5-day period, which is $850 billion in market cap lost. And then you drive up, what, almost $20, $500 billion? Folks, when one equity can drive down $850 billion in market cap and drive up $500 billion in market cap over the period of 6 to 7 days, and realistically, there's no specific market news driving that, you better believe that we have some volatility in this market when you can get those types of moves. All right. Let's jump to gold. Take a look at gold on the daily. So a nice couple of days. We had some nice acceleration from where you were on gold. Okay, but here's the thing to watch on gold. This is a nice bounce, folks, but you were coming into a lot of volume on the way down. Okay, you check out where we were October 27th, 324,000 contracts. And you look at the volume that we had on the way down, okay? We are bumping into some real volume here. And I know you guys know this, and girls, but be careful in this gold market right now because, yes, you're breaking above these low volume days you had back here, but you're not breaking above October 28th on gold, okay? October 27th on gold. You just broke above those areas on lighter volume, folks. You broke above those areas on lighter volume in gold. And you're bumping into this area from October 22nd and 21st as well. All right, I tell you what, could we just take a quick break, Al? Let's run this break a little bit early. I just got to take care of one thing, folks. We're just going to run the 3-minute break if we can, Al, and I'll come right back after the break. We'll run it a little bit early. We got the S&Ps right now, folks, up by 14. We got the NASDAQ up by 38. Dow up by 283. Perfect. I appreciate it, Al. We'll come right back, folks. I'll stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN. educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archive live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 17 points. A little bit of selling on the opening bell. You check out the NASDAQ 100. How's that for a little bit of selling on the opening bell? Quick 100 points to the south in the NASDAQ 100. We're still positive by about 0.2%. Dow, a little acceleration on the top side there. We're up by 351, up 0.7%. The Russell up by 0.7. You get a bid as well. So S&Ps, the only one not participating. You get the NASDAQ trading lower, and Dow and the Russell surging higher on the open. Bitcoin up by $2,000 right now. Let's talk a little bit of cars. The have and have not society, folks. Car loan delinquencies hit record for the riskiest borrowers. Okay, at a time when wages aren't keeping up with inflation, asset prices, whether you're talking about homes, cars, all of it. Subprime borrowers, 60 days past due, almost 7%, 6.7% in October. The highest since 1994. 1994. Look at this chart. I mean, we were down at 2.5% post-COVID. Now everybody was getting rained on with cash. But that's a problem when you're talking about the highest levels we've seen in 31 years of delinquent borrowers, subprime. And yeah, you got budget crunches going on all over the place, cash crunches. No need to even explain about it. Yeah, the catch-up game is very difficult. Check it out. In the third quarter, 28% of trade-ins toward new car purchases carried negative equity. What are people doing buying new cars if you got negative equity? We've talked about this before in the den. What are you doing buying a new car if you got negative equity? All right. Now, you could have negative equity and you're making enough money where it's not a big deal. Okay. But that's the highest level since the first quarter of 2021. Interest rates, of course, being a problem. Prices being a problem as well. And yeah, I mean, if you got a credit score between 300 and 500, folks, and you're trying to buy a car, How about 16% rates for a new car and 22% for a used car? Well, that's the problem when you got a credit rating between 300 and 500 and you're taking out credit. Oh, man. This fine lady, Megan Langoff. How's about a 29.5% rate for the loan on her 2004 Kia Optima? My goodness. She's paying $500 a month for 2014 Kia Optima. Let's check this out. Let's check out what a Kia Optima 2014 value. Oh, man. Pretty close, Duffy. $2,500 to $7,000, depending on the condition, and she's paying $500 a month. Oh, my principal hasn't really moved in 2 years. I mean, it's just a sad story. Yeah, I know. I mean, I just Googled. Hey, here's the Google, folks. 2014 Kia Optima value between about $2,500 and $7,000. I mean, it's an 11-year-old Kia. Okay, it's an 11-year-old Kia, and she's paying $500 a month. I mean, this is where you see people getting preyed upon because, unfortunately, everybody needs a vehicle. She should not be paying $500 a month for a car that's valued at a few grand. And that's just financial literacy, and it's a bummer because the people who need it the most in terms of credit sometimes are the ones that get preyed upon. And in my opinion, that's just getting preyed upon. All right, and it's like the ultimate anecdotal for that article. But boy, that's an issue. Now, this one's an interesting one out there from Harvard talking about grades. Now, Harvard in focus. It shouldn't be political. All right, I love Harvard. Would love to go to Harvard. And yeah, they catch some heat sometimes. But folks, it's an amazing institution. All right, it's a bummer how they're under assault right now. But guess what? Doesn't change the fact that, yeah, they got grade inflation, man. The numbers don't lie. Now, when I was going to Noble and Greeno in Dedham, Massachusetts, folks, I talk about it many times. I was very, very fortunate to go to that school. The matriculation list on that school still blows me away. In my class of about 110 kids, okay, it was like 7 or 8 went to Harvard, 3 went to Duke, Dartmouth, Stanford, the whole likes of the Ivy League down the line. And even back then, to put it, even back then, we knew, okay, you get into Harvard in particular, especially with the competition we had in high school, coming from that high school, there was no grade inflation at Nobles, folks, okay? They sorted out, okay, the cream of the crop with grades. But you knew that all you had to do was make it to Harvard and everybody got A's, especially considering the context of how difficult everything we did was in high school. One sec. Now, the logic is probably that why would you not want all your graduates having A's, basically, right? Why would you not want them all having A's? Of course you would. Because if you come from Harvard with a high GPA, you're probably going to beat out another student from another Ivy League school with a less GPA. Here's the percentage of A grades. What's remarkable is they don't even go back to percentage of A grades from when I was in high school, okay? Folks, there was a perception at my high school because we knew enough people that went to Harvard that once you got to Harvard, you just got A's. That's what happened. Now, yeah, you probably have to do the work to a certain degree. And if you're coming from a school like my high school and you actually get into a school like Harvard, most of the time, you're going to be able to put in the work necessary to get the A. But look at the rise. Percentage of A grades, 20% in 2006 to almost 60%. The GPA from, that's 1985, but even go back to 1995 when I was in high school, what is that, probably 3.4%? And now you're pushing 3.8 to 3.9, so that's a real deal. It is. But guess what? People know that outside of Harvard as well. It's like, you don't think hiring managers on Wall Street know that everyone's printing A's at Harvard when they come in with their GPA? 60% of grades were A's. The median GPA is 3.83 is the median GPA. The other side of this, though, is the quickest way to solve this problem is to grade on a curve, okay? So here's the quickest example of how grading on a curve can be good and it can be bad, okay? The quickest way to solve this problem, right, is you could just grade on a curve. Harvard could say, you know, an A should be this percentage of students. If you're going to be an A, you're going to be in the top portion of grades, right? A B is going to be this. You grade on a curve. Here's the problem with grading on a curve, folks, okay? Go look into the qualifications, and I'm going to try and pull it up at the break. I'll try and find it. So here's where Florida schools, okay, grade on a curve. So when Florida schools call themselves an A school, okay, you're an A grade school in Florida, right? Oh, man, that's great. An elementary school, right? We're looking at schools for Tommy. Say, what kind of school are you? We're an A grade school in Florida, okay? This is going to be eye-opening to many, okay? Say, that's great. You're an A grade school. You guys must be crushing it. You'd say, well, it's important to recognize that we grade on a curve, okay? And by grading on a curve, check this out. By grading on a curve, do you know what schools get A's for elementary schools? All you got to be at is 62%. That's less than 2 out of 3 kids. 62% is the school grade that you need to call yourself an A school. Folks, that's a D minus is what that grade is. That is a D minus, a 63%. So what happens is you have schools that exceed and they push, whether it's reading, writing, a combination of reading, writing, science, okay? And look this stuff up. It's real. I've looked at the schools. That's why it's bonkers that these schools call themselves A schools. But guess what? They grade on a curve. So it goes both ways. All right? Grading on a curve, it can be good. It can be bad. Yeah, but Harvard's got grade inflation, man. But that got me going because anytime I see that and I think about grading on a curve, how about that? Right? Florida, I mean, imagine. This is one aspect of why schools have a problem. Imagine if Florida just had to tell you how well their schools do, okay? How well schools do, and they had to use their actual grade. Do you know what would happen? They'd all be like D's and F's, but they can't have that, right? Florida's not going to have every school be a D and an F, okay? So what do? They grade on a curve. By grading on a curve, they make sure they have A schools because the A schools are just the best schools among schools that dramatically underperform, period. All right, that's a shame that somehow we're able to call schools A schools, and meanwhile, you basically have more than 1 out of 3 kids not able to read and write at grade level. A school. A school. It's a problem, man. I mean, you talk about patting yourself on the back for failure. How about that one? That's straight up to the top, man. You need higher standards. You know, the fact that they get to call themselves A schools on that is something that, you know, you dig into it, folks, it's just an absolute sham. All right, we got some selling in this market right now. NASDAQ 100, how's that for a quick 200 points south? Take a look at the daily volumes, okay? Now, you had a nice hammer candle on that low on Friday. You do 750,000 contracts in the NASDAQ. But that was lower price. That was lower price. You bounce on lighter volume. Yesterday, we ease up a bit. Today's going to be an important day, folks. Look at the ES. We're about to go negative as well. We jump around. What do we got? AMD shares higher? We sure do. AMD up by 5.7% right now. We jump around to some of the others. Google shares off by 1.7%. Amazon off by 0.4%. You jump over to Microsoft, 0.3%. Meta loses their AI chief. I mean, geez, folks, look at Meta, man. Meta was touching 800, and just like that, we're at 600. 25%. Something tells me Zuckerberg doesn't want to see all his wealth disappear again. You know, he's a long-term thinker. but he's not. You can do a lot more with your shares when you're pushing 800 than you can when it's pushing 88. All right, banks, one of the leaders today. How about that? JP Morgan. It never stops, man. JP Morgan, all-time highs today, 321. JP Morgan up by 1.7%. Bank of America up by 1.7% as well. Goldman up by 3%. Morgan Stanley up by 2.5%. The banks, maybe a little rotation into banks. One more segment, folks. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 8. NASDAQ rolls into negative territory. We got some of the biggest leaders out there going into the red. You jump over the NASDAQ 100. AMD, the big winner there. But yeah, look at all the big dogs. Google off by 1.5. Meta off by a percentage point. Tesla off by almost 1% right now. Amazon off by 0.4. Apple, big day for Apple yesterday, off by 1%. Let's take a look at Apple. And yeah, how about that acceleration? That's a weekly. There's your daily. Apple comes up almost touching the highs. You have a high out here of 277.32. You make it to 275.91. And we're backing off a bit. But strong day from Apple yesterday. Some decent volume. And yeah, how about those banks? Let's take a look at the volume. So JP Morgan accelerating higher. All right, we're coming into these highs from September. And we'll see the volume. Let's take a look at the weekly on the volume. Yeah, not bad. You only got about 41 million shares at the highs there for JP Morgan. And you're breaking above there. We've done about 11.9 for the week. Jump back to gold. Up by $28, 41.45 in gold. Take a look at the daily. You know, keep the spikes up on gold, folks. We had quite a little pullback here, but in reality, we're coming into higher volume. You're trading higher on lighter volume. Whether you look at where we were October 27th, October 28th, both of those days we trade lower with volume. We've now risen above those highs. You're breaking above those highs with lighter volume, and you're coming into mammoth bars from October 22nd and October 21st. Gold's got some work to do to get above there. Gold up by 0.7%. Silver. Look at silver, man. Silver is strong. Silver up by 3%. Folks, thanks so much for tuning in. Kicking off your Wednesday right here. Stay tuned. We got our man Basil Chapman. He's up next for the Tiger Technicians Hour. Steve Rhodes with the Trader's Edge at 11. Fast Market at 12. Larry Pesavento at 1 o'clock. Folks, have a great day. Have a safe Wednesday. Stay tuned. Basil Chapman's coming up right now, folks.